Welcome to the EP Wealth Advisors Informed Investor Market Update. This is for the week of January 4th, 2021. We actually made it through 2020. I'm your co-host. My name is Breen Murphy. I'm the Director of Client Experience here at EP Wealth Advisors. And as always, I'm joined by Adam Phillips. He's our Director of Portfolio Strategy here. He's a chartered financial analyst. He's a certified financial planner. He helps on our investment committee. You may have seen him quoted in the Wall Street Journal, Bloomberg, CNN, Market Watch, some of the online publications, video ones like Cheddar and the TD Ameritrade Network. Adam, welcome to 2021. Thank you for joining us.
Glad to be here in 2021. Good to be here with you, Breen. Happy New Year.
Yeah, Happy New Year. All right, so we always talk about what everyone's, what are clients talking about right now and what's going on in the news. So what is top of mind right now?
Sure. Well, top of mind today, look, it's Monday. It's the day before the two runoff elections in Georgia being held tomorrow. So I think that's what we've been waiting for the last several weeks is this is going to decide who ultimately controls the Senate, right? Is it going to be that the Democrats, they need to win both of these races to get to that 50-50 split with Vice President-elect Kamala Harris coming in to break the tie, or will the control remain with the Republicans? So I think that's really what everyone is watching today and waiting for the results of. Okay,
so it's coming in tomorrow, which will be, yesterday by the time that the first viewers of this are getting it. So we'll be starting to, we may have results. We may have to wait till the end of the week. With all the mail-in voting, it takes just a little bit longer to count. So talk to us about what's going on right now, right? And what you're seeing as the potential responses to the market and implications for the market, whether you get a Democratic victory or a Republican victory.
Yeah, so we always talk about, you don't want to overstate the significance of the political environment where you're talking about investing, and specifically that relates to the presidential race, right? We have Joe Biden being inaugurated on January 20th. That's not likely to be too much of a game changer. What is important, though, is who controls the other the House and the Senate, right? The rest of government, and it's important because all those policies that were discussed on the campaign trail by Joe Biden that some people were worried about being more restrictive and potentially hurting corporate earnings and the outlook for stocks. Those don't have as big of a chance to actually become a reality if the Republicans retain control of the Senate. Now, if we see that this flips and Democrats take both, they win both of these elections, then we do need to start talking about potential changes to the portfolio. Some of these might be preparing for higher corporate taxes. I think that's the number one thing that comes to mind. Higher corporate tax rates. Joe Biden was campaigning on raising them from 21% to 28%. In this scenario where the Democrats win both of these elections, you might see a compromise to maybe 25%. Some people are saying either way, you're likely to see higher corporate taxes. And so that would mean that we would look at our portfolio, maybe take a look at those sectors, or more specifically, those companies who benefited most from the recent tax reform and the tax cuts, and thinking that they might have the most to lose in this scenario. Okay, so that's one of the potential changes. But there's other things that might be positives that come from this, right? If the Democrats control both houses of Congress, they control the White House, you're likely to see more fiscal spending, a large infrastructure deal. That might mean that we want to focus on some areas within the industrial sector, potentially. So it might also be helpful for some of those consumer-driven sectors and industries, because Democrats are more in favor of direct payments to households. What you might see is additional stimulus, and another fiscal deal. So these are some of the changes. I mean, it's really hard to say right now, and that's why we're waiting just to see what things look like when the dust settles.
Yeah.
If we're left with more of the status quo and Republicans retain the Senate, then like I said, you're not likely to see as many changes going forward.
Right. Well, there's a couple things, that I wanted to bring out that you were talking about in this. Like, I think the first one is, even if Democrats do take control of the Senate as well as the House and the presidency, the first thing is it still is going to take time to pass policy that, will affect investments, right? And it's not going to be all at once. It's going to be a little bit at a time. And, from past conversations, I remember it's going to be more around the edges rather than it will be like a big structural part of it. And the second thing that I start to hear is, and this is kind of gets into why the president maybe doesn't have as much an impact on the economy. And we're talking about these changes around the edges. When you talk about, what the Democrats are trying to do, or when you talk about like what the Republicans would do, like there's always kind of this like plus and minus that they're doing to the economy. It's more about what they're doing. Like, so corporate taxes is obviously going to have a slow, but like direct payments to citizens is going to be a great stimulus for the economy. So it's like, just looking at that, you're looking at more like a values-based perspective than you are looking at maybe like drastic changes to the economy. And,
Yeah, I mean, I think what you're getting at, Breen, is it's true, and the way that I phrased it when we were back in the election days or pre-election days was there's winners and losers, right? And so it's about identifying who will benefit from some of these potential policy changes or new leadership, and who will be hurt from that, right? So it could hurt higher tax companies, but it could benefit consumer. Those companies who rely upon consumer spending, specifically those from lower income households, industrial companies, those that will benefit from infrastructure. So you're right. It's about picking and choosing your spots. It's not necessarily a negative for everyone. So that is an important distinction to make.
Right. Okay. So we hit a little bit on the elections. We started to talk a little bit about stimulus payments, and that they're with a democratically run Senate, that we might see more of that. Now, I'd love to hear a little bit more about the vaccine, right? Because the core thing that has been causing the issues in the economy, has largely been the coronavirus, right? And so, talk to me a little bit about like what the vaccine means for the potential year ahead.
Well, look, I think that's going to drive a lot of the near-term outlook, and especially where we end the year, right? Right. So going into the year, we feel good. We have a favorable outlook for stocks. We think that we will end higher, but so much of that will be driven by the effective deployment of this vaccine, right? And how the virus ultimately plays out. We're living in the middle of a pretty bad surge right now. There's evidence of this new strain popping up in many different areas. So there's obviously things to worry about, but we're also seeing the vaccine, even though it's been a little bit slower to get going than people had hoped, it's starting to gain steam. I saw over the weekend that Dr. Fauci said that I think we're on pace to get to about 500,000 vaccinations a day. I believe that was the number that he put out. So obviously that's a pretty small number when you talk about the scale of this and what we ultimately need to achieve to get to mass immunization and vaccination.
Right.
But we do see the light at the end of the tunnel. So it really just depends how quickly we can get that going. So there's a few things, Breen, that I think are the foundations of our outlook for right now, right? And right now we are going based on the expectation that we will see the majority of the population be vaccinated sometime around the middle of the year, okay? Which means that sometime in the late summer, potentially into the fall, we'll start to feel a little bit more normal as a society, and we'll start to see the economy really start to recover then, when there's all this pent-up demand right now, and we'll finally see all this money that's been sitting on the sidelines by consumers start to get put to work as they can now get out and spend again.
Right.
The other thing that's we're basing our outlook on is the expectation that the Fed and potentially lawmakers in Washington and will provide this ongoing support, right? And so when I talk about the Fed, they're going to keep buying bonds known as quantitative easing. They're going to keep these interest rates low, and they're going to do that for the foreseeable future. And then the third thing is that inflation is going to remain low. And so I would say that if any of these three things do not come true or start to go the other direction, I would say our outlook will change. But these are really the foundation for our outlook going forward.
Okay. No, I mean that makes sense. But I want to make sure, like, as we talking about this, like we're talking a lot about, vaccinations. We're talking about a lot about fiscal policy. We're talking a lot about monetary policy. Talk to me about, what's going on from a business perspective and like a consumer perspective. Like, where are we with consumer confidence? Where are we with corporate earnings that will be coming up now that we've ended a quarter? Like, I'd love to hear like how that is going.
Yeah, I mean, at the end of the day, that's what we want to focus on. We want to focus on the data, and as much as we all try to focus on the health data these days, it's not necessarily my strong suit. No, that's not that's not where my education was based in. So I want to focus on the data, on the economics, on those things that really do drive the long-term outlook for stock. And so you touched on a few of them, right? Consumer confidence. It's down right now. We've seen a couple downward moves in this index. It's back to August levels right now, and really that tells you that consumers they're seeing that many of them are on lockdown again. They're seeing that the rising case count and rising death toll in the U.S. and that is having an impact on their confidence. These things. It's an unfavorable trend, but these things can correct themselves pretty quickly, right? If we start to see the news turn and become more positive going forward. So I'm not too concerned about that. On the earnings front, I think that is the big driver of stocks. That's why you're investing in them, right? Is for that earnings to participate in that, and you want to see those earnings grow. So we expect that the fourth quarter, which just came to an end, when we start to see the fourth quarter earnings start to be reported, we're likely to see those earnings fell, just because the fourth quarter of 2019 provided a pretty difficult hurdle for these companies on a year-over-year basis, right? That being said, we do expect earnings to recover in 2021. The current expectation is for earnings growth, year-over-year earnings growth of about 15%. So give or take, but many analysts actually expect that earnings will get back to their 2019 peak this year. So that remains to be seen. We'll see how it goes. As I said, a lot of that depends on the vaccine deployment and our fight against this virus. But that's what many are expecting right now. I would say that just about everyone, though, expects earnings to be positive and to move in the right direction. You're starting to see that from companies as well, from the management of these companies who are saying they're making moves and they're making statements that suggest they feel pretty good about the outlook going forward. Specifically, we're seeing a lot of them who had suspended dividends or cut their dividends in the middle of the crisis or in the beginning of the crisis start to bring those back. I think of TJX as an example of that. So TJX is they own TJ Maxx, Marshalls, Home Goods. Right, so they're an example of one that reinstated their dividend and actually increased it from where it was. So that's a good sign. You're starting to see other companies making similar moves, and then beyond that, you're starting to see them provide guidance that is better than what many analysts had even expected. And so these are positive trends that we're seeing, and I think that bodes well for their earnings outlook as well as the overall equity market going forward.
Okay, awesome. Well, I think that's a pretty good picture. Like, how is that starting to impact the EP Wealth Advisor portfolio? I mean, like, are you guys looking at any changes right now? Or are there places where you're evaluating? I mean, going back to it, this is clearly around the edges, but I'm always interested in like, where are you going with the portfolio?
It's a fair question. We're always talking about it. We will have our typical Monday afternoon investment committee meeting virtually today, and I'm sure we'll talk about that. What I would expect is that we're not going to make any changes today or really discuss any changes. We're going to wait and see how the runoff elections play out.
Right.
That will dictate our sector outlook going forward, and whether we need to take anything, trim anything away from certain sectors, add it to other ones. I mentioned some of the potential winners and losers before. So we'll see if any changes are necessary. For now, we feel pretty good about our outlook and our current positioning. Right, we're still overweight in industrials. We're overweight healthcare. We're overweight technology companies to the detriment of things like utility companies that we just don't see as much value in right now.
Right.
And they're more mature companies and not as much growth potential. So we're investing. When it's tough to find growth and economic growth is low, you want to invest in growth companies typically.
Right.
And so that's where we've been, and that's where we're comfortable right now. What I will say is one of the themes that we are talking about right now, and it's more from a broad allocation perspective, not specifically to U.S. stocks, but it's our international or global allocation. We're starting to warm up to the idea of adding more to foreign stocks, and it's an area where we've been slightly underweight, and underweight to us is just shy of about 25%. Between 20 and 25% of our equity allocation is in foreign stocks, and so to us that's slightly underweight. Our neutral is closer to 25 or just over 25%. So we've been warming up to the idea of adding to things like potentially emerging market stock. Part of this is on the expectation that the U.S. dollar is depreciating, is likely to continue depreciating against major currencies going forward.
Okay. So with all that, what are the things that someone that they've heard all this, they've heard that we have like a cautiously optimistic outlook on the market. We may see some, good things like around the vaccine helping open back up. We may see corporate earnings return. So looking at that, what should they be talking about as it relates to, their financial advisor and their financial plan?
Yeah, I mean, one thing that's not changing in 2021 is that the financial plan is still the best way to control your destiny, right? We're not going to be able to control that the market moves, and I would expect that after a nearly 70% rebound in stocks since the March low, that we're likely to see some volatility here as we make our way higher going forward. And so these things won't change. And so the best way to clients to get comfortable or remain comfortable with their long-term plan is to go and just revisit their financial plan with their advisors, make sure that they're in the right strategy and that they have a game plan going forward.
Okay. Well, that sounds great, Adam. One thing I always want to ask something a little bit more personal, as we're looking, for these events, doing these interviews. So it's a new year, it's 2021. Do you have any resolutions this year?
Do I have any resolutions?
New Year's resolution.
I'm trying to read more. To be honest with you, and that's one of many. I mean, if you ask my wife, then I'm sure she has a lot of resolutions for me. But the one that comes to mind, Breen, is I got. It was very easy during the pandemic when we were all kind of stuck at home to just watch and binge TV shows, and I watched all the popular ones. I feel like the Queen's Gambit, Yellowstone. The one about the tiger, which seems like very early on, was that Joe Exotic guy. So I mean, so I got plenty of that pop culture and and the viewing in. What I'd like to do is just go and make sure I continue to do some reading too. Outside of the typical research that I consume, it's kind of refreshing to.
Anything you're staring down that you want to read?
So I just finished a book called The Sixth Extinction. Which is really interesting. It seems like it's one that might be up your alley if you haven't read it. It's pretty interesting. Just talks about different ways that the world is changing, continues to change, and how it's put pressure on various species over time, and how it's likely to continue doing so. So it's eye-opening in a number of ways. The one that I'm actually reading right now is about Bitcoin.
Okay.
which is a topic that we've been reading about, hearing about a lot. And I'll be honest, it's one that I don't fully understand. And I think a lot of people are still trying to understand it. And it always makes me nervous when we talk about, people talk about, do you invest in Bitcoin? It's hard to invest in something when you don't fully understand it. And it's very hard to determine fair
Value.
market value,
Yeah.
right? If I don't even know if it is possible. And so I said, you know what, I'm just going to try to just dive into this research and see if I can learn something. And so it's just, always trying to grow and make sure that I take my eyes off the TV screen every once in a while.
Nice. Nice. Well, that sounds great. Well, Adam, thank you so much for your time. For anybody that's watching this, we want to make sure you know that Adam is coming out with his quarterly newsletter. He's got that. It's going to be, coming out probably next week if we're not mistaken. So please look for that. Also, if you like these videos, please feel free to subscribe, like, comment, on YouTube, and feel free to subscribe to our blog, where you can get them every week. It's a new year, big year, 2021. It's coming after on the heels of a historic one. We wish you all the best. And if there's anything else we can do for you, feel free to, write in and let us know what you'd like for us to talk about. Anyways, have a great day and a great new year.